Well, hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
I am Santosh Nair.
Santo, aka Santo, it was such a remarkable recovery on in the market today in the second half. Fag-End buying, lifted the Nifty above that 20,900 mark. At one point in time, we were around that, 20. In fact, even below that 20,800 mark, we saw a triple-digit cut coming in on the index. When I was doing the midday market check with Yatin, and we were talking about how we'll have to see how things pan out in the second half, because second half tends to be a little more pacey, and we tend to see some bit of recovery kicking in the second half.
Well, Nandita, I think this is again that phase of the market where the buy on dip strategy seems to be working perfectly.
Yeah.
On one side, there are these concerns that valuations must have gotten a little expensive, but at the same time, whenever there's a correction, stocks tend to look cheaper than what they were just a few days back. So that encourages a lot of people to jump in. And I think probably that is what we are seeing right now.
Yeah, and let's also note the fact that the Midcap index managed to hit a fresh high today. So at on one hand, people are talking about how mid and small cap valuations are running ahead of themselves, and every day we see the Midcap or the small cap index hitting fresh highs. In fact, even the Nifty Bank index, recovered significantly from the day's low. Ended above that 47,000 mark, although it did end in the red. But what did well, or what lifted the market was the auto pack. That index was up somewhere around 1%. We saw a good recovery coming in on the realty pack, on the pharma pack. A lot of sectors participated except for IT. Didn't turn out to be a very good session for the IT giants, the likes of TCS, Infosys. These are some of the names that feature on the Nifty losers list. You have the likes of HDFC Life. That stock was up 5% yesterday. Today came under a fair bit of profit booking. So did Ultratech Cement. It has had a fairly good run. Last 2 to 3 sessions, it was among the top Nifty gainers, but today came under some bit of profit booking. And Axis Bank, there was a block deal in the counter today, and the stock was down in the session. Throughout the session rather, and ended lower by about 2% or thereabouts. On the flip side, if you look at the gainers, two-wheelers, Hero MotoCorp, I think up 3%. In fact, even TVS Motor for that matter was up somewhere around 4%. You had Eicher Motors, M&M, so a lot of these auto names feature on the gainers list, and so does pharma. The likes of Cipla, Sun Pharma, Dr. Reddy's, all of these are gaining in trade today. And NTPC Power Grid, power rally continues. So these are also among the top Nifty gainers. Anything that you are spotting in the mid-cap end of the market?
Well, plenty of names there. We have PC Jeweler, GMR, Airports, Strides Pharma, Prestige Estates, CESC, Hutco. All these stocks were up anywhere between 4 to 12%. Now, we are seeing strong buying interest coming in the smaller real estate companies, because the bigger ones have run up fair bit. Now, with the smaller companies, there have always been concerns about corporate governance. These stocks saw some sharp correction during the previous bull run of 2007, 2008, and since then, investors in general have been worried about the second line names in the real estate sector. But now, I think we have come to a point, Nandita, where we just seem to be running out of stories.
Yeah.
So, when there are limited stories, I think some of the old ones which may not have had a very stellar track record, but where valuations appear to be cheaper relative to some of the bigger names, I think that is where the market is going right now.
Right. So, a lot of action and interest still remains in the mid-cap end of the markets, Santo. But on that note, let's take a look at some of the stocks that are on our radar this afternoon, starting with Laurus Labs. Pharma pack did well today, the likes of Sun, Cipla, Dr. Reddy's, but Laurus Labs ended lower by about 2%. There's a reason behind it, obviously. It, this became the latest company to receive the Form 483 from US FDA, wherein they have, made 5 observations for its Vizag unit. Now, US FDA, pain has been seen across, when it comes to Cipla, Dr. Reddy's. But, point to note is that these stocks have recovered. We saw a knee-jerk reaction coming in on Dr. Reddy's a few days ago, but since then it has made a good recovery. Same thing is expected for Laurus Labs, given the fact that it has 15 days to respond to the US FDA and tell them what kind of remedial measures they will be taking. This doesn't seem to be a very big setback as of now. Depends upon, what they tell US FDA with respect to these observations. But aside of that, earnings for this particular company weren't all that great. In Q2, we saw an 80% drop in profit. The CDMO business didn't do all that well, and that was reflecting in the earnings as well. And a lot of these brokerages had also downgraded the stock post its earnings. Outlook, bleak. In fact, Kotak had a sell rating target price of 270 rupees, which at that point of time was implying a 30% downside. And stock is down 10% from its 52-week highs. So, earnings wise, it failed to impress. Even in the first quarter, I think the earnings weren't all that great. The trajectory going forward looks a little rocky here. Given the fact that now this whole US FDA thing has come up. So let's see how things pan out. But if you look at the, stocks valuations, trailing PE of 56.7x, which is more expensive than the likes of Dr. Reddy's, Cipla, Lupin. So even valuations wise, the stock is looking a little expensive. But at least, things haven't been all that great for Laurus Labs over the last few quarters.
Well, this is a very forgiving market, Nandita. No matter what the adverse news development and any correction, once again, just people are just rushing into buy. I think we are seeing something similar with Laurus Labs. There's a lot of selling pressure in Dr. Reddy's a couple of days back. The stock has managed to recover slightly. I think a full-fledged recovery would still be some way off, but clearly the stock has not fallen further after that initial wave of selling, and it has managed to crawl high.
Same goes for Cipla, I think.
Cipla,
the US
and now
news came out, it was down 8%.
Yes, and in the case of Laurus Lab also, it seems like market is willing to give it the benefit of doubt, but. You mentioned that part about 56, 57 times trailing earnings. Now the thing about trailing earnings is that it can shrink or expand suddenly depending on how the company performs. But in the case of Laurus Lab, quite a few brokerages, in fact, Kotak Securities also has been repeatedly saying that maybe market is underestimating the compression in earnings going forward. And that something is off at this point of which the market is not really being able to latch on to. So, big earnings surprise in the case of Laurus Lab. It looks a little less likely at this point in time, but of course one can never say for sure.
Just one point I want to make. I was talking to an analyst from Kotak Securities in the morning show as well, and I was speaking to her about some of these FDA issues plaguing these companies, and she said perhaps this would be a time to focus on India focused or companies with more India bent, right? And also the fact that perhaps this is a good time to play the pharma theme via hospitals and diagnostics rather than manufacturing companies because of all these ongoing US FDA issues.
Well, and the first stock on my watch list is ITC. The company held an analyst meet, and overall most analysts are bullish on ITC, and that bullish mood continues even after the analyst meet. Morgan Stanley has a target price of about 493 rupees for the stock. CLSA has a target price of 492 rupees for the stock. Both brokers are bullish on ITC, whereas Jefferies has a slightly lower price target, 452 rupees, but it too has a buy rating. Now, key takeaways from the analyst meet is that the company is trying to improve its profitability in the FMCG business and expects to improve it by anywhere between 80 to 100 basis points every year. It has reiterated that guidance. And on the cigarette volumes, brokerages are slightly mixed on that, but the general feeling is that if the tax rates remain stable, if the government does not tinker around too much with the tax rate for cigarettes, then probably you could see the volume growth slowly inching up. But the big question, Nandita, is whether the stock, how higher can the stock go from here? You saw it touching about 500 rupees in July. That was when news came about the company demerging its hotels business. But the big re-rating trigger has already played out. The stock was undervalued till about a year back. There are a lot of expectations on the demerger of the hotel business. That has also come through. So the stock seems to be lacking major triggers, which is also seen from the way in which it's been moving sideways since July. Just about it hit about 500 in July, and now it's around 453, 54 odd. So it's been sideways. It's consolidating the big gains over the last year, and looks like this trend could continue for some more time. It could be more of a steady compounding play according to analysts tracking the stock.
Yeah, let's hope, Santosh, that doesn't become that meme stock once again, because it was stuck in a range for a long time, and then it had become the cause for a lot of jokes and memes, but but hopefully it will move up, because some of the brokerages have come up with targets of at least 490, 493 or thereabouts. So we'll have to see how things pan out. But the next talk on my list is PI Industries. Of course, a lot has been spoken about this company since yesterday, because yesterday it slumped somewhere around 10%, and even today it has extended its losses and down somewhere around 2% or thereabouts. So 12% kind of a downtick coming in on this particular counter, given the fact that we have a Chinese player entering the pyroxasulfone market, right? The manufacturing of pyroxasulfone, which is nothing but a pre-emergence. It's a it's a molecule that the company manufactures, and it has till now it has had very less competition in this space, but now a Chinese company coming in, that means increased competition, and that could kind of take away some of or impact earnings for the company. That's what brokerages have maintained. In fact, if you look at Motilal Oswal, it says that this has been a key molecule for the company, and that it's been a key factor for the strong performance of the company over the last few years. And now with the entry of Rainbow Agro, that means heightened competition, and that could also impact margins going forward. If you look at Nuvama, it says that pyroxasulfone actually faces risk of going off patent in the US market. It has been patented in other countries also, like Australia, for instance, US, and other key markets as well. But in key US market, it faces the risk of going off patent. But management has said that there's no such near-term or medium-term risk, and that this particular market could have the potential of becoming a multi-billion-dollar market. Currently, it has a market size of $600 to $700 million. So, management has retained FY24 growth guidance of 18 to 20%, and has allayed it was looking to allay fears of any erosion when it comes to the margin front. So, we'll have to see how really it pans out. The stock did manage to recover for a brief period, but then it once again succumbed to selling pressure. So, it looks like the market is not really buying into this argument that threat of higher competition doesn't really exist. But we'll have to see how really this pans out.
Well, and the last stock on my watch list today is Mahindra and Mahindra Finance. Stock still not recovered from the mauling it took immediately after the second quarter numbers. Jefferies has come out with a report on the stock. It has rated the stock as a hold with a price target of 270 rupees. Now, the big concern that most fund managers have about Mahindra and Mahindra Financial Services is that its margins have been pretty erratic, and now unless they see some kind of consistency there, there's unlikely to jump into the stock in a big way. Now, according to Jefferies' report, management expects loan growth to be healthy, and that net interest margins can inch up by about 20 basis points to 6.8%. However, the brokerage sees operating expenses to assets ratio continue to be slightly on the higher side, and while it expects the earnings, the asset quality and earnings to be a bit more better in the second half of the year. It feels that overall the return on assets could be capped at 1.8 to 1.9%, and this largely offsets whatever positives are there in the stock because of reasonable valuations.
All right, M&M, among the top gainers on the Nifty today, the stock has been in focus. But with that, we've come to the end of this edition of Closing Well. Those were all the stocks that were on our radar this afternoon. But Santo, we have a key Fed decision to digest tomorrow morning, and hopes are that the Fed will be holding fire when it comes to interest rates. That's almost a given priced in. But what market will be watching out for is the commentary. If there's any indication of an early rate cut coming in, or how many rate cuts is the Fed really looking at, after the recent string of data that we've gotten from the US economy. We'll have to see really what he says, because mostly in all these Fed meetings, in the commentaries, there's hardly anything indicating an early rate cut, because the Fed chief has always maintained that it will be data dependent, and we'll have to see how things go on, and it's too early to actually talk about a rate cut.
Well, that's the other reason for that, Nandita, is that much of the Fed's hawkish stance to some extent has been undone by the continuing rally in the stock market, right? So, if they have to keep inflation under control, they also need to keep the wealth effect in check. The moment people feel they become they have more money, they tend to spend more, which in turn makes the Fed's task much more difficult. So, the bet would be that Fed will continue to harp on the higher for longer theme that it has been doing for the last many weeks, months now, saying that yes, the battle against inflation is one, but it's too early to let your guard down. So I think the market will have to brace for rates remaining at this level for some more time.
Some more time, yeah. We'll have to, of course, see what happens later tonight, and we'll, of course, be touching upon it early morning tomorrow. So tune in for that. But for now, it's a goodbye from me and Santo. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.